So good morning, guys. It's Thursday, the 14th of June, 8:30, and this is the DAX morning briefing. And we're going to run through the session review from today and have a look at using some of the technical tools that we've got in the course that we do behind the scenes. So most of this stuff may be new to you. If you're unfamiliar with any of the tools or the techniques that are used here, don't be overwhelmed. If you are already a subscriber or a member of DAX Trader, then just simply log in to your account, thedaxtrader.co.uk/account. And once you've logged in, you will find the course there. And there's so many different sections that will be useful for you to help you with these tools. It's quite a comprehensive course. Spend some time getting used to that and working through it. All right. So in front of us here, we've got a 20-minute DAX chart, and we've got some very, very simple lines on here already. I've got a trend-defining, major trend-defining level down here at 12,600. That's the final line in the sand. The reason I've come to this is because we have our first low down here. We have a high here. This was a higher low, and that was confirmed once that was formed, which was a high that took out the previous high. All right. We've got 3 alternating pivots, so we can simply draw an Andrews pitchfork. Simple as that. What I liked about this particular fork was that price hit the median line and then has at the moment threatened to reverse it. Now, what's worrying people, no, let me start again. What's worrying bulls, and I would normally count myself in that camp, what's worrying me at the moment is that, yes, we've created a new high, barely. It really just crept above the previous highs. It wasn't particularly significant. But we've now formed a low at 775 after holding above this 750 minor trend-defining level. So think about it when you're doing your swings. What you want to find is a series of higher highs and higher lows. Okay, now a low is only confirmed once the high is taken out the previous high. So in this particular example, you've got this one here, and let's just be generous and say that that's a mini minor swing there. There's another one here. That's confirmed once this high was taken out. Now this low here would be confirmed once this high at 950 was taken out. And I've got a red arrow pointing here to that spot there. This was the moment where it should have gone to take out 950. We had this quite sharp reaction down here yesterday where quite a few of the traders got long there after it confusing. They would have probably started thinking, the novice traders would have started thinking that this was the opportunity to sell. They would have got short. And of course, as so often happens on the DAX, you know, you see it again and again and again, it just takes your lunch money. So this was the spot where you would have imagined the momentum would have been strong enough for us to take out that 950, but it failed. And so now we're going to go and take a look at some more of the granular detail from yesterday's price action to find out how significant this gap might be, and to find out how significant this lower median line parallel of this fork might be if it breaks, specifically this 775 and 750 level down there. Whether or not we are looking to dig a little deeper into this zone before heading higher, or whether this actually now is the end of the road and we're going to turn around. Okay, so trading financial markets is incredibly risky. It involves the risk of losing your invested money. I'm not providing any financial advice in these videos or tutorials. I am just doing this for educational purposes only. If you decide to take a trade off of any of this information, do so entirely at your own risk. And on the subject of risk, be aware of the fact that later on we've got the ECB meeting. So I would probably imagine there's going to be a bit of consolidation, a bit of fear, a bit of a liquidity drain leading into that event. Don't trade it. It's a gamble. There's just no need to. Wait for the dust to settle before you get in. All right. So that being said, let's get on with it. So if we jump into the, let's do this one, 250 tick chart. Let's rewind it all the way back to the beginning of yesterday. And let's see what we can do here. So we pretty much came to the end of the session here. There's actually, I've just wondered whether. Look at that. Yeah, I didn't even mean to do that, but I've just noticed these two little lows here, and I was kind of in my mind projecting this median line and thinking to myself, that is roughly halfway between these 2 points. So it creates a nice little fork there. But, I don't know how significant that'll be. I'll just leave it and perhaps delete it in a moment. So we're going to go through this tick by tick, or bar by bar, should I say more specifically. And this is a 250 tick chart. It's not a time chart, so just be aware of that. Now, hindsight trading is very easy to do, so I'm not advocating that this is the way that we do everything, but this is just giving you an idea of how you can use these tools in a live environment as the bars are forming and as the emotions are running away. Okay, so where are we? We are, so 7 o'clock. Just jumped into the day. This is how it started. Pretty much zoomed that median line of the fork that we've just got there, and we're off to a pretty much bullish start, which was corrected almost immediately by the next candle. And so you'd probably expect for the gap to close, but it didn't. It continued higher. Now, that's an interesting little bar. I mean, this is within the first 15 minutes of opening yesterday. You've already got a gap higher, which didn't close, followed by a continuation move higher, pierces a new high, and then a large engulfing candle. Now, bearing in mind that this is a 250 tick chart, there's only a certain size that these bars will actually generally get, because after 250 ticks, it will move on to a new bar. So it's not like a 5-minute chart where you could have a huge bar, because a lot of price can move in 5 minutes. This one's different. So as far as relative size goes, that's quite a large, significant bar for a 250 tick chart. And because it's an engulfing, you would start to think, if you were an aggressive scalper, that you could just simply short that and just stick a stop above the top and maybe aim for 2 or 3 to 1, or whatever your reward to risk ratios will be as you're trading. And if it doesn't work out, it doesn't work out. But based on that kind of move, you see the gap close. There's a risk to the trade, because it could simply slingshot from here and continue higher. And if that's the case, then so be it. But as far as yesterday was concerned, it didn't really do that. And I found that little bar quite interesting in there, that mini little doji there, the kind of couple of them together. See the two that I'm pointing to? It's just an interesting little section. It ran about the median line of the previous fork. I don't think that's significant, but I just found it an interesting observation. Sometimes it's worth marking out those levels, when you see dojis forming. So we'll see how that continues. So it gets down to the lower median line parallel of that previous fork, finds a mini reaction, creates a doji. That's an interesting one to mark out. But just continues to make progress. Now that is very significant. Again, look at the size of that bar relative to all of the others. I mean, that's a very heavy candle, followed by that kind of doji. And there's almost a bit of consolidation there. So you would probably want to mark things like that out, because of how heavy that candle was, followed by how much it resisted going any further straight after it. Just mark that level out. It might be and maybe just watch that. Notice how your 3 to 1 would have got hit there, and it continued even lower. And it's still pretty heavy, so that would have been a significant sign. Significant sign of intent. But hindsight is always 20/20. It's easy to see after the event. Okay, that is an interesting little bit of price action. That's a bit of symmetry that you often want to find at the end of some sort of impulse wave. Because often in these kind of waves, when you measure the top to the bottom, there's often a balance point in the middle. In this particular case, it was the bottom of that large candle. And I would have liked to have seen those two dojis be in the middle personally, because that would have been nice. But you can't fabricate these things. But often you'll find some sort of balance point in the middle, and at the bottom and the tops you'll find a pivot component. And in this particular case, the pivot component was a large engulfing candle. At this particular point, if that is the pivot, then it looks like you've got some kind of symmetrical price action, and you've almost got two bookends of similar candles on either side. So that's interesting. If it continues to move higher from there, you might want to consider taking a trade to speculate the fact that that is going to be finished. And that's a counter trend trade, because it's been moving lower for a little while. So you'd probably want to get a little bit more than 3 to 1 on your trade. Try and go for something like 4, maybe even wait a little longer for some confirmation. But it was just an interesting spot to see that sort of symmetry and form a pivot component.
No.
Now that engulfing candle there is interesting for me. Yeah, that is quite interesting there. And it's actually just finding some resistance just on the underside of this level we marked out. Do you see that? Again, I don't know how significant that is, but it's just interesting to see that when you had this move down. Okay. And this large, it's not even a wide range bar really, is it? It's relative to this large one we've got marked out here. It's not. But I like the fact that it managed to kind of find its feet just underneath it and then start to just shoot through that zone. So that's interesting. That particular candle can sometimes, I mean, I'm not a candlestick trader, don't get me wrong. I'm not really that bothered about the way a candlestick looks 9 times out of 10, but there are times when you're looking at things that it does provide a little bit of information that's useful. I wouldn't build an entire strategy around it, but you can use it to your advantage sometimes. Now, at this stage, you probably start to be thinking, okay, well, maybe this was just a simple reaction that looks to have retraced around about 50% of that wave. And it's got to the top of this ignition point of this candle here. And that's often when you'd find price is going to maybe turn around. And you can, I'm not going to use forks in this particular example, but sometimes median lines can spot these areas. But it hasn't in this particular example. So you would be forgiven for thinking that maybe this was the end of your trade, or maybe this was going to be the turning point and we're going to be heading lower. And if you were in a trade like this, you'd probably want to move your stop to break even. And when you start to see it move a little lower, you start to think, okay, well, in that case, yeah, maybe I would even get out of that trade. But in this particular case, you would just let it run. We'll see whether this zone holds up again. Gets back into this higher zone once more. So it's still valid. This area, this zone is still valid. It's the point of ignition from that large spot, that large candle down. Okay, well, there you go. Now you just had a swap. That's a swap. You had some intent from the bears here. They took that area out. They were defending that area up here, and the bulls have just stomped on them. And that area is now gone. They have lost that area. That's swapped. Has a swap zone. So you probably would find a retracement back towards that level. And the other thing I'd probably would mark out at this stage would be that little mini doji there before this point of ignition. I like to just start speculating the start of what would be a multi-pivot line, which can often be turned into center lines when you get these kind of points, because that did take a there was a mini ignition point here. It retraced back to that candle and then created a larger one to take out this previous zone here. So that's a point of interest. That's quite significant. So you've got 2 points. We ideally want 3. Or a caveat here would be that I also want to see an action point if I was going to do an action center reaction line set, which will be something that looks like this, where you see kind of price do this and you get these 2 points of ignition, or these 2 points on the line. And as price creates a sort of more significant jump higher, that's your action point. And then you often get an opposite and equal reaction on the other side. So that's what I'm looking to find using these particular MPLs. And we'll see whether or not we get the action that we're looking for. Okay, so we'll move that on. Right, okay, well, I mean, you could argue that those 3 consecutive bullish candles there would be our action point, because we've accelerated at a much higher trajectory than what we had been doing up to that point. So that's an interesting spot. We'll see how that develops. Doji, interesting doji at the top. It's still continuing to accelerate. Well, I mean, I've only got 2 points on this MPL. I don't know if that's really enough to call this a textbook center line, but I'll do it for now. We'll just see if it's anything, if there's anything in there. If it takes out that previous high, then it might sort of, well, that's an interesting tail or wick. It's struggling to break that zone. That's quite a lot of sideways action here, and it did kind of break it. So at the moment, what we're looking at, and I'm just going to remove this fork that we put in there from earlier, because I don't really need that for the moment, and it just clutters things up a little bit. We're starting to gain some kind of consolidation in here. And it's very, very sideways. Now, there were reasons for that. Perhaps it was coming up to the FOMC. Well, to be fair, the FOMC was at 7 o'clock and we're at 10 o'clock. So I don't know whether that's really that valid. But you'd often find on days leading up to large central bank releases, and we've got 3 this week, plus it's the week of the witch. So there's a lot going on this week. And when you see these consolidations, you often tend to spot them being a balance point of a wider move in whatever direction it was previously heading. So in this particular example, we had a bullish wave, which also I've just realized has completely retraced this. We've turned into a V. We've got a V. That's a valley. And often when you get this, when price goes way ahead of the usual retracement zones, it often will come and reach the top of its valley, which it has done in this particular case. And it's found resistance there. So that would explain exactly why we're doing this. And that may well be the balance point for an extended move higher. We will find out. Now, we've broken below this center line. How valid that is, I don't really know, because we're moving sideways. So we are going to touch the reaction line by the looks of things, but it actually doesn't really mean a great deal. So I think that that's probably not the best example of an action center reaction line. I do like this little area. Price frequency has changed a little bit. We are below the reaction line, but I like how it's continued to move from that spot. So it'll be good to watch its development from that area. And then maybe something else will come along. Now that's pretty interesting. Let's just kill this one off for the moment. And I mean, you can see that that's an area of consolidation. I don't need to mark that out. Again, I just want to try and keep the chart as clean as possible, really. I think we've passed these zones off as well now. So let's just tidy the chart up a little bit so we've got more white on there. Okay, now this little area of price action here is interesting to me because we've got a point of ignition there where price has taken off and it's accelerated at a faster rate than it has been moving. And we've got these 2 points here, which could be interesting for me as well. So for the moment, I'll just mark them out here. And again, very similar to what I just previously did, I might turn that into a center line. I wonder if we get third touch or whether we get further action point here. Let's have a look. Okay. Well, I mean, there's no harm in drawing the lines on the chart, but again, it may not be the perfect textbook example of this particular tool, but that's the kind of thinking that I would have. If it stays below that, if it breaks above it, then we'll just readjust the line for the moment. But I'd like to see how it peels away from this. Oh, okay. Well, let's see whether we get some. Let's see if it catches on this center line. Right. Okay. So we peeled away from the center line. We peeled away from this action line at the top here, and we've come back down to the center line. We've now broken below that. And often what you tend to find is you'll get price kind of heads towards the reaction line, comes back, comes to test the line before heading down. So that's the kind of price action you're looking for in these particular line sets. I like the fact that we've got this 3 touches on the line. Ideally, you want to see those before the action point, but it's not really the end of the world. I mean, it may even just go straight down to the reaction line here. You just never know. I mean, there is a bullish engulfing candle there. I remember we see those often as pivot components at the bottom of moves. So if this did fail and it just continued higher, then so be it. You just would lose that trade if you were short here, for example, when it broke through the center line and you figured that it was heading down to reaction. So is this a retracement or is this a full-on reversal? It's difficult to say. That's an interesting wick on that candle just after these little areas. So You know, it might give you some faith. You've got a second test of this. There isn't really any interest in sort of wide range bars or gappy price action. There actually is one right there. Then you got a bookend on the other side. Okay, fair enough. So this particular price action is what you want to see, and it can give you a clue as to which direction it's going. When it's like this, it's just kind of normal, and you tend to find it just grinds higher. But when you actually get some activity, then something's going to happen. One of these sides are obviously now gonna win. There you go. All right, so that's the reaction line. And in actual fact, it created this mini sort of pin on that reaction line. It's just such an awesome tool, this. It really is. And it's just a brilliant forecasting tool. Now, I'd be marking out that 850. That's the low of the day so far. All right, well, tested that. Did it break below? I can't remember. Well, we're moving sideways pretty much, aren't we? So we've definitely found a base here. You could even say that that's its own multi-pivot line right there. You've pretty much got 3 touches there. Let's actually just do that and see what happens. Let's just do a ray from here. Straight through that one. It's pretty much on there, isn't it? Well, there's your third touch. We've pretty much got 4 touches. That's a pretty strong multi-pivot line right now. Oh, okay. So you've got some action developing here. And it stays on the underside of this reaction line as well. Look, it follows a similar trajectory as well. It's really interesting tools. I do really like how the action reaction works on the markets. All right, so you've definitely got action here. So you could maybe speculate that, and let's even just turn that into an action center reaction. I think we'll use that one. And then let's go right up to the top there. Now I'm going to remove this previous line because it's cluttering my chart. So my reaction line now, ooh, okay, it's down there. All right, well, let's see how that works. And I think now we're sort of kind of coming up to that. Well, actually, that's that. It's 7:30. So that would have been when ECB, FOMC happened last night. And of course, they increased rates by 0.25% to 2%. They've hinted that there's going to be 2 more rates, and it's probably going to be September and December. They're seemingly happy with interest rates, although I am slightly concerned still for their well-being in the long term, because as soon as they start increasing their interest rates, the bond debt that they have is going to exponentially increase. They don't have enough money. Oh, hello. They don't have enough money to cover their own bills, if you like. They don't raise enough through taxation in order to balance their books. So they have to continually raise more debt. And the more debt that they raise, the higher their interest payments will be when their interest rates go up. So I'll leave my personal opinion out of this for today, but it's a pretty bleak outlook for them long term. All right, well, for a lot of countries, in fact. All right, so we've got to the end of the session. We've got to the end of the day, and we have created this multi-pivot line on this action center reaction line set, and we have gapped below pretty much. Actually, no, I think we're not. We're 8 o'clock, 5 to 9. So we've not actually finished. But we did gap the action, the center line. We did gap the center line at the start of the session, and almost tagged that reaction. Oh, there you go. I was going to say almost tagged that reaction line, and we did. So again, it's just a simple view of how these tools work. Now that's quite significant. The fact that it gapped the center line. And I also just want to go back and check this low just to see if there's anything interesting on the price action from yesterday. Wow. Wow. Look at that. Look at that. Do you remember that section? We were talking about that a minute ago with that wide range bar and the base of that bar where it kind of didn't continue to head lower. We marked it out because it got gapped on the other side. Well, I say gap, wide range bar. It got zoomed on the other side. Well, that's the area that it found the low today. Do you think that's a coincidence? I don't. And there you go. It gets baited again. Oh, wow. I love the DAX. The DAX is just brilliant. And so, you know, it does make sense for you guys to do these reviews because, yeah, you might have remember how the market roughly looked at the end of the day. But when you look at the individual bars, you really start to understand what price action is doing and what story it's telling you and how to figure out what some of these clues mean and how you can then put them into your own price action during the day. And of course, it does take some skill and a lot of experience to really know how to process all of the different things that it's telling you. But you want to kind of delete all the useless crap and just keep a few of the decent things that it's using. Focus on 2 or 3 of the main tools. You don't need to use all of them. There's about 100 different things you could do. You only need about 3. And you don't need 150 indicators on your chart. You really don't. So that is taking us up to current. That's where we are right now. We've got a cluster of dojis forming around about the top of this gap. Just coming back to the major big picture, really, that's what we want to kind of keep in mind is the fact that we need to break 950 in order for this major bullish trend to continue. If 775 is taken out, 750 is the next target. Once 750 goes, the minor swings are over. We're no longer bullish anymore. But the key sort of line in the sand is this 12.6. As 12.6 goes, then, well, I mean, 12.3, 12.1 is our levels that are being talked about, but you know, we're not just going to automatically assume that it's going to do that. We've got to be careful. Oh, excuse me. All right, so that is it for the DAX. If we just go and quickly take a look through Footsie, Footsie is pretty boring at the moment. What I do find interesting on Footsie right now is that we've got this zigzag balance point here. If we draw a line through the middle of price action there, you can find 3 spots where it's been tagged and holding below that. Again, is that a coincidence? I don't think so. That's a balance point. That's where price is happy to do business. So it's remaining below that. The key areas are 79 and 76. They're the major trend defining levels. We are ranging on the majors. And the minors, we are between 76.40 and 77.60. And again, trading sideways. So the best strategy to use at the moment is BBRSI. If you are already a member, you already know about that. And there it is. So you can find the details in the forum and you can download the indicator and learn the strategy in the forum. For the Dow, it's a little bit more interesting only because we had this action center reaction line set. We broke below the center line. We tagged the reaction line and now we've crawled up the underside of it before releasing. So difficult to know where this is heading now, but the break of that mini MPL was pretty significant. It did tag the 3-to-1 on this particular idea. And so, yeah, we'll just have to wait and see how the 25.069 level holds up when that gets tested, which it looks like it's going to be at some point. All right, guys, that is it for me. So I'm going to go and upload this video into YouTube. I hope it was useful for you. If you want to get in contact with me, you can find my details in the description of this video if you're watching it at home. You can get me on Telegram. That's where I spend quite a bit of the time. If you want more information on any of these tools, then there's plenty of information on the website. Check the link in the description below as well. But apart from that, have a cracking trading day. I hope it all goes well for you. Be aware of the ECB later. Don't be trading around it. And don't forget there's BOJ tomorrow as well. Excellent. I'll leave it there. Take care, guys.